Welcome back to the Brent Bruce Daily. Today is August 19th. Welcome to Friday. It is 1:47 p.m. Central Time, and I am going to go over something very quickly. I'm going to touch on something that is going to require another lengthy YouTube video for me to give you what is really going on because it is so interesting. But we're here to talk about home loan interest rates and exactly how they are being affected. So today, what is going on? Yesterday, we had a pretty bad day, did not end well. Today is even worse. We are having a bad day in the home loan interest rate world. Home loan interest rates are going up. So let's take a look at the chart and we see, remember, the red is bad. On this chart, when these charts go down, these indicators here go down, the candles go down, interest rates go up. Why is this happening? Bad day, bad day, bad day, bad day. We've broken through all three layers of our triple floor of support, and now we are in the no man's land that we talked about that we don't want to be in. How far are we going to fall? Are we going to hit this Fibonacci level and stop like we did here? Are we going to fall all the way down to here when we were talking about the mid fives and even into the upper 5% range on our Brent Bruce Daily scenario, which would be, we could see a 1% interest rate increase in the coming weeks if we start to really fall down here. So why are we seeing these negative days? We're not really seeing it. I was even wondering, why do I seem to be missing the mark? Why aren't we doing what I was anticipating, which was break above the 100-day moving average and come up to the Fibonacci level? And in listening to some of the people that I follow closely, I wasn't really hearing an answer as to what is going on. And I think I have found out what it is. So, what is the kryptonite of home loans? What is it that home loans dislike the most? I even use the word hate. Home loan interest rates and mortgage-backed securities hate inflation, right? We know that. We talk about that all the time. But some of the inflationary reports that have been coming out have been good, like saying inflation is going down. So why would we be worried about that? Well, I think this is what's going on here. So let's take a look at something that I don't want to say quietly, but somewhat quietly happened in the past week. A lot of talk up front, but then just kind of somewhat quietly went through. And that is this. The Inflation Reduction Act was passed and signed by President Biden on the 16th of August. Now, we heard a lot about it, Inflation Reduction Act, and I was really kind of like not paying that much attention to it. But then I kind of just even thought about it for a minute, and it was like, wait a minute, how does spending $740 billion reduce inflation? Okay, so remember, we know that inflation is the effect of too many dollars chasing too few products. That creates inflation. That is the end of it. So why would printing $740 billion more dollars and pushing $740 billion into the economy, how could that reduce inflation? That answer is something for another day. We just don't have enough time, and I want to stay focused on the home loan interest rates. But I believe that is what is affecting home loan interest rates quietly. The mortgage-backed security market investors are not liking the fact that the government is going to be dumping in $700 billion, which I'll give you a little bit of a teaser. That's more money than was spent for the TARP proposal and the TARP money that revived the entire banking system in one day. $700 billion was spent. Just this alone is more than that. Remember that happened in 2000, I believe it was 8. Remember that big day? This is more money than that day. And this is being spent to reduce inflation. Definitely a video for another time. So let's go over here. Here's the 16th. Here's when it was signed. Bad, 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 bad. Every day since it's been signed, home loan interest rates have gone up. Okay, so that's why I think this is happening. So today we are down 45 basis points. Let's go ahead and take a look over here at what that means to our actual home loan interest rates. We talked yesterday about the fact that we were showing 5.25% with no points, but that you could get a 4.999% interest rate for less than, I think it was less than $1,000, if I remember correctly. It was a very small amount. it was definitely less than a quarter of a point to get that 4.999 interest rate. So let's take a look and see where we are right now. The Brent Bruce Daily scenario. All right. We were again 4.999 with a little bit less than a quarter of a point, or 5.25 with no points. Now, because of today's market up 45 or down 45 basis points, we are now showing 5.375. Remember, a couple of weeks ago, maybe 3 weeks ago, we were 4.625 on the Brent Bruce Daily scenario. So 4.375 with an $83 credit. Let's open this up and see if we want to spend a little bit of money. I mean, a quarter of a point gets us to 5.25, but now we're talking about 4.999 costing more than 3/4 of a point. So you see how that was more than a half of a point swing in cost. So we were under a quarter of a point to now more than 3/4 of a point to get a 4.99% interest rate. That's how the point systems work. And I'll have to do another video on that as well. But a fairly large swing now this week from where we started. And what was the real impetus for the change? We really didn't have a lot that came out that we could point at until I realized, oh, inflation. So the Inflation Reduction Act, in my opinion, is being looked at as inflationary, causing inflation to come to more inflation to come in the future, which the mortgage-backed security market is not liking. They're seeing through it, and interest rates are going up. That's my thoughts. We'll see. I'll put together a video with more detail on specifically that won't be part of the Brent Bruce Daily. This will be more on my Brent Bruce YouTube page, where I put more in-depth videos, which is why you should subscribe right away so that you know when that video comes out. Make sure you subscribe, like, and share. Have a great day, a great weekend, and I will get back to you on Monday, and hopefully we'll turn around and start heading back the other direction. Have a good day.